Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So there's a couple of things that I'm pretty much always hunting for. The first one is new investment ideas. I'm trying to tick off my sort of 1 to 2 investments each year to, punch a couple more holes in my 20-hole punch card. And the second thing I'm often looking for is like-minded investors, other individuals that are on sort of a similar pursuit to what I am. And then again, where I can interact with those people, learn as much as I can from them, all that sort of stuff. So in this video, I want to share a couple of things that fit into kind of both of those categories. Firstly, a few sort of websites and just online tools that I've been using recently to try and generate some new ideas. I haven't had many good ideas recently, so I've been working a bit harder to try and generate a few and find some new companies to look into. And secondly, I want to share a couple of new investors that I've just come across recently that have fairly similar philosophies to myself in terms of how they approach investing in the stock market. So with all that said, let's jump over to the computer and get straight into it. Okay, so the first couple of websites I want to show you here are actually both from Tobias Carlyle from the Acquirers Funds, Acquirers Multiple. And this is really a place that I've been coming to try and source potentially, undervalued stocks, undervalued companies. So if you're not familiar with Toby Carlyle, he has a really good podcast, Value After Hours, and I think the Acquirers podcast is the other one. I pretty much listen to Value After Hours every single week. There's sort of Toby and 2 of his kind of mates on there that have a really good podcast each week, so try to listen to that. But in terms of investing, the Acquirers Multiple, there's actually a book written about it by Toby. I recommend that if you haven't read it as well. It's pretty good. But basically, the Acquirers Multiple is essentially like a quantitative metric. It's basically a multiple, sort of like a PE ratio or a price to book, only this time it's enterprise value to EBIT. So he's sort of looking for companies from using that enterprise value component of that specifically, that have very little debt, have cash-rich balance sheets, and typically if companies are scoring well on this kind of metric, they also tend to be buying back shares. They're generating a lot of cash relative to their sort of market price, and there's just sort of a lot of things going on that tend to be good for shareholders in general. So this is potentially kind of a nice hunting ground to try and find investment ideas. The Acquirers Fund, I don't own any shares in this ETF or anything. The actual ETF is actually a long short fund, so it's not only going to buy those shares in businesses that score really well on the Acquirers Multiple, it's actually also going to short the stuff that performs really poorly, companies that are heavily indebted, issuing a lot of shares, and basically aren't very profitable, or may even be losing money as well. So I'm not so interested in the short side for what I'm doing here. Really what I'm after by going onto a website like this is I'm trying to find the companies that score really well on this type of metric as a way to, again, try and find businesses at a margin of safety, and try to find companies that I can look into. I'm often surprised by the quality of some of the companies that kind of show up in this sort of screen. So if I scroll down the page on the acquirersfund.com, we're going to find a section that gives us the top 10 holdings, and there's a couple of fairly recognizable names in there. So, I recognize Intel, for example, eBay, Best Buy, Bank of America. I have heard of Synchrony Financial as well. So there's a lot of interesting businesses on there for me to kind of start digging into, because on a quantitative basis, on a simple metric at least, they are potentially undervalued. Of course, we need to try and assess what the future is going to look like for these companies in order to really figure that out. But it's a nice starting ground to get at least some ideas in your head. And you can actually go and download the full holdings. So if I click on that over here, I can download a spreadsheet which is going to give me all the holdings. And you can do this for most ETFs actually, but this is going to give me the holdings, and it's going to give me also what percentage of the assets in this ETF are in each of these companies. So this is a nice starting point. Again, it's really just a place for me to try and generate ideas. If I scroll down here and you start seeing negative values on the percentage of assets, these are going to be the shorts. So it's just kind of a nice place to try and generate some ideas from that Acquirers Multiple. The other place I'm going to go, which is still sort of linked with Toby Carlyle, is he actually has a second ETF, which is Slightly different. It really still uses just the acquirer's multiple, but I believe this one is long only. And the other difference is that this focuses purely on small and micro cap stocks, which I don't think the regular acquirer's fund does. I'd probably have to check that, but I don't believe it gets too much into the small and micro kind of stocks, but this one does. So again, same idea here. This is just really a place to try and generate some ideas. So in this case, I'm on roundhillinvestments.com/ETF/deep. I'll put all the links for all these websites down in the description below. And again, if I scroll down, I can get to the top 10 holdings and see some of the businesses in there. And if I want to download the full list of holdings, I can do that. And it's going to give me the full list. And again, it's going to give me the weight, so what percentage of the total assets in the ETF are in each of these companies. And when we start including some of these smaller cap businesses, often we can get more extremes in how companies score on these multiples. So if you restrict yourself to just really large companies and you use something like an acquirer's multiple or a PE or whatever metric you're using, you're going to get a certain basket of stocks. But if you expand your universe as wide as possible to include the small and micro caps as well, there's a good chance that you're going to find some companies that score exceptionally well on these types of metrics. So again, it's just a place to try and find some investment ideas. I actually spent a fair bit of time going through some of these last night, and typically what I'm doing first of all is I know that a lot of these are going to score really well quantitatively, looking at valuation and so on. So really the first thing I'm doing when I'm looking up these companies is just trying to figure out what they do and whether it's going to fit in my circle of competence. Because if I can't understand the business, it really doesn't matter how cheap or expensive it is, because I'm actually not going to be able to know whether it's cheap or expensive if I don't understand the business and the future trajectory of that company. So those are the first couple of resources I've been looking at recently. The second one I'm going to jump to is the corner of Berkshire and Fairfax. This is one that I've mentioned in a couple of videos. I know Brad Kellner mentions this a lot in his videos. And basically, the corner of Berkshire and Fairfax is just a big forum for absolute value investing nerds, much like myself. So it's a really useful resource. There's a lot of smart people in this forum, and it's pretty cheap. So this is one you'll have to pay for, but I believe it's 30 Canadian dollars will get you a lifetime membership of Corner of Berkshire and Fairfax. So I mean, if you can find one investment idea or keep yourself out of one investment that eventually turns out to go poorly, that's going to more than pay for itself, right? So small price to pay for trying to generate some really good ideas. One of the things I like to do on here is really anytime I'm looking into a new company, perhaps, I simply just search that company name or the ticker symbol on Corner of Berkshire and Fairfax. That's often a really good place to start. So, I mean, for example, if I just put in something real generic here like Apple or AAPL being the ticker for Apple, and search that, this should give me a whole bunch of results because that's obviously a quite large stock, but it's going to give me all of the sort of threads on this page where people are talking about Apple. So someone's talking about it in relation to general investment ideas. We've got someone talking about Apple as it kind of lives within Berkshire Hathaway. And again, you can dive into this stuff and start reading about it. And this forum's been around a long time, so you're going to see discussions on companies back, potentially over a decade in some of these posts. So really nice place to go. And I've noticed that there's basically no company I've ever searched, I don't think. There might be one or two really, really small businesses or something, but almost every company in existence, I've found at least ones that have come across my radar that I've searched on Corner of Berkshire and Fairfax, seem to have at least one or two kind of forum posts or discussions about them. I've even searched one or two companies that have market caps down to like $10 or $15 million, like absolute nano cap type businesses, and somehow they still tend to show up in Corner of Berkshire and Fairfax for the most part. So really good resource there. Highly recommend checking that one out. The next one I'm going to jump to is Value Investors Club. Again, this is just kind of like a place for, again, like value nerds to congregate together and try and generate some good ideas. Again, there's some really smart people on here. The only thing to keep in mind with this one, and you'll see I'm getting like a bit of a warning here, or like a message. I don't know if you'd call it a warning. I'm only going to be able to see ideas that are more than 45 days old. I don't know the exact terms on here, but I believe you have to sort of post your own investment ideas and kind of just contribute to the Value Investors Club in general, and then you can see new posts kind of immediately as they turn up. But if you've just got like a general membership, like me, I don't think I've ever paid anything for Value Investors Club. I'm going to be on a 45-day delay for most of these investment ideas. But for the most part, that's actually okay. I mean, really what I'm looking at here is trying to get my head around old write-ups and so on that people have done over the years, and how the thesis and the story might have changed or maybe even stayed the same for a long period of time, but nothing's really ever come to fruition with the stock and the returns that have been generated. So again, if I search the site, let's just search something like SRG, Heritage Growth Properties, I am going to get a bunch of different write-ups and ideas from for Heritage Growth Properties, and you'll see some have got this little S by them, so that's telling me that they are shorts. So there's a couple of people on here that are have got a thesis around why they should short Heritage Growth Properties. All the other ones are going to be long Heritage Growth Properties, and they've got various dates on them here. So the most recent one I can see is from November 2018. If I click on that one, that's going to take me to the full write-up, and this person's able to give me their full thesis on Heritage Growth Properties at that time. And this one is a fairly in-depth write-up, and a lot of them are like this. And the other thing that you'll often see is comments. So other investors that kind of have thoughts on this idea can go into messages, and they can, write in, various questions and so on, and the original sort of author of the thesis can reply. And there's some good discussions that kind of go on in there as well, similar to what you might see in something like Corner of Berkshire and Fairfax. So Value Investors Club is another really good one. And the final thing I just want to show you is a couple of the new investors that I've recently come across and have started following. So I recently found this article on Guru Focus called Norbert Lou, the best fund manager you've never heard of, and I believe I heard Norbert Lou mentioned on the Value After Hours, Toby Carlisle sort of podcast as well. And I was really interested to hear about what Norbert Lou was doing. So Norbert Lou runs a fund called Punch Card Capital, and firstly that name resonates with me very strongly because I talk about Warren Buffett's punch card analogy a lot in these videos. And secondly, I heard it mentioned that Norbert Lou only has 3 stocks in his portfolio and has an incredible performance track record. So that again is something that gets me really interested. Not that I'm looking to be someone that has 2 or 3 stocks in my portfolio or anything necessarily, but I really like the idea of having a high level of conviction on each of your investments, not being someone with 200 stocks where you hardly even know what every company in your portfolio is or does. I really relate strongly to people that have a high level of conviction and are willing to hold those businesses for the long term. So I'll put a link down to this full article on Norbert Lou. That's up on Guru Focus down the description below. And the other thing that I'm going to start doing is adding Norbert Lou to my 13F sort of updates. Every time I check 13F filings when they come out, Norbert Lou's getting added to that list. So if we look at his 13F at the moment, his most recent update, he only has 3 stocks in there. He has Berkshire Hathaway, he has Ally Financial, and he has Winnebago. Now, Winnebago and Berkshire are companies that I know. Obviously, we all know Berkshire Hathaway from Warren Buffett. Winnebago I know because I own shares in Thor Industries, and Winnebago is sort of their main competitor. So interesting to see Norbert Lou invest in that. Ally Financial, I've heard of it here and there, but I don't know too much about it. So interesting to see those 3 stocks in there. And if you look at the holding periods, he's owned Berkshire since 2014. He's owned Winnebago since the start of 2019, and he's owned Ally Financial since the start of 2020. So interesting to see that makeup, and he's got them, fairly evenly distributed in the portfolio. Berkshire's about 40% or 45%, Ally's about 33%, and Winnebago's about 20-odd%. So interesting to see 3 kind of high conviction picks there, and he's sort of the first new investor, super investor, whatever you want to call them, that I'm kind of following along with. And the second one, and the last thing I want to talk about in this video, is another guy by the name of Michael Mitchell. So he's at Ignore Narrative on Twitter, And this is another investor that, again, I've come across recently, and his strategy is just something that I relate to quite strongly. So Mike Mitchell is actually, I believe, around 40 years old and retired. He started out in the hedge fund industry, did very well as an analyst, and then got to the point where, $1 million bonuses and stuff just weren't really moving the needle for him. So he decided to retire and basically just manage his own money and do what he wants to do. And he put some really thoughtful posts and tweets, up on Twitter. And he actually shares his portfolio pretty much every month. So that's something that's really interesting. I recognize at least one of the ideas in there, again, from the Value After Hours podcast, which is Curate. Really interesting investment case where he basically got like 40% of his capital back almost immediately from some bond offerings and dividends and so on that happened. In that case, topic for another day, but that's kind of an interesting investment that he's made, and then the stock has gone on to do very, very well also. And he's also made an investment in, I believe, like a timber company. I'm going to probably have to scroll for a little bit here to try and find the exact tweet. Maybe I'll put a cutaway on the video here if I can't find it very quickly. But again, that stock is up maybe 500% in the last 6 months or something. It's done extremely well. But, I'm not necessarily just following Michael Mitchell because of his recent results. I just really like his philosophy. So basically the idea of his entire investment process is just to make 10% a year. And he really doesn't care how that 10% a year is made, whether it's made by finding stocks that have capital gains, that retain all their capital and grow intrinsic value over time. He doesn't really care if he buys a source of cash flows that's going to return him 10% a year. He doesn't really care if those cash flows are lumpy year to year. He doesn't really care if it's a compounder. All he cares about is trying to find something that gives him 10% a year, and that gives him 10% a year conservatively. And again, that's kind of something that I relate to, not necessarily the percentage or whatever. That's kind of just an arbitrary number, I suppose, in a lot of ways. But I'm fairly agnostic in terms of the types of businesses I'll invest in. So I'll invest in high growth businesses, low growth businesses, potentially even declining businesses if the numbers are right. Really what I'm looking for is something that makes sense to me, the price is right, and I can see, the safety of principal and adequate return sort of profile in that investment. So that's what I'm looking for. And again, Mike Mitchell is someone who seems to have a pretty similar philosophy. So would definitely recommend following him on Twitter if you don't already. So there you have it. Those are a few of the resources I've been using recently and a couple of new investors for you to follow along. I'm definitely going to try and include Norbert Lou in the next sort of lot of 13F updates. So keep an eye out for that. I suspect we are probably going to see fairly minimal changes quarter to quarter from him, just given the concentration he's got going on in his portfolio and how long he's owned some of those stocks. But anytime we do see a change in there, it's definitely going to be one to dig into because he has very high conviction picks. And there's a few websites there that hopefully allow you to generate a few new ideas as well. Now, if there are any other websites that you guys have been using recently, definitely drop them down in the comments below. I would love to check those out. But that's all from me today, and I will see you in the next one. Cheers.